we are going to continue the conversation on DAOs, what a Web3 economy can look like. We have another great thinker in the space, Lex Sokolin, joining us today. His newsletters, podcasts are just such a fantastic resource for the industry. So please join me in welcoming Lex Sokolin. And to interview him, we have Bo Brustkern. Are you gentlemen here? Oh, there you are.
We are here.
All right, good to see you.
Well done.
Thanks, Bo. Okay.
Hello, Lex.
Hello. Hello.
Thanks for joining us, everyone. Way to kick it off with Lawrence, Peter. Well done. I loved the cue that he gave us. Lawrence said, "I have no idea what metaverse is," so we're going to lean on Lex to give us a little bit of his thinking on that. First off, let's get a quick introduction. Who are you, and what is ConsenSys?
Hi, everybody. So I'm Lex. You can find the definition of the metaverse on Wikipedia. I think that's pretty definitive. Or maybe on Twitter. I don't know. Or TikTok. Who's on TikTok right now? I like the laughter. That's important to me. Okay, so I'm Lex. I'm the head economist at ConsenSys, and I've been a fintech and DeFi entrepreneur for about a decade and change. And ConsenSys is one of the definitional firms in the Web3 space. We're known for kind of two things. We're known for a lot of things, but there are two things that are important to be known for. And the first one is helping people use Web3, and that's through the wallet MetaMask. So if you've downloaded MetaMask, if you've had UX challenges with MetaMask, you know ConsenSys. And we've got about 30 million people using that wallet to access the open economy. And then on the other side, we help developers build things. So whether that is helping people plug into Ethereum or Polygon or Arbitrum and create decentralized applications, or whether that's launching protocols, we help developers stand up their businesses and kind of their ideas in this economy. So you can see how the two things connect. Help people make things and then help people use things. And then for me and my team, I've been focused primarily on cryptoeconomics, token engineering, DAOs over the last year, trying to take that seriously.
Yeah, for sure. Quick poll for the audience. We're going to bring up a Slido or a QR code that's going to bring you to a separate area of Slido that is actually a survey. There's 3 questions. If we can get you to scan this with your cameras and take the poll, the more cameras I see, the happier I am. Thank you very much. And because we'd like to find out, your experience / potential expertise in these different areas. While you're doing that and we collect the results, let's crack it open with Lex. Why does DeFi matter?
I would love to know the results of the surveys and answering that question. Because for different people, they come to the question with really different assumptions and very different contexts. So you can come at the question just from the perspective of crypto and thinking about Bitcoin and thinking about Ethereum and then thinking about DeFi as the financial applications on Ethereum. I think for me, I see a much larger trend, and I see a trend that really starts with the early 2000s as the internet starts to bite at various sectors in the economy, right? So software is eating the world, that's the quote, and then everything expands out of it. And if you think back to 2005 or early 2010s with fintech becoming a theme, and fintech trying to digitize banks and reframe the user experience, to me, DeFi is the continuation of that application of technology to the financial sector. And the application is quite different than fintech. I think it's reductive to say, but I think it's fair to say that most of fintech is about taking the financial services experience and taking it from a bank branch or a financial advisor office or a lending underwriter's office and putting it into the phone, right? So that's not all of it, but that's maybe 80% or that's 100% of what's in the news. and that's maybe 80% of what's going on. And so fintech is trying to take traditional financial products and put them into digital distribution, and whether that's the web or whether that's the phone, you are in this kind of weird half place. You're in the place of a Spotify that is trying to sell you CD-ROMs, or a Netflix that's trying to sell you video cassettes, right? And there are nice ways to say that, and there are mean ways to say that, but that's where a lot of things get stuck. And so we've gotten to a place with gigantic footprints, with million user footprints, and all these companies that are really struggling to monetize, struggling to build commercial models, struggling to avail themselves to whether it's banking regulations or underwriting or kind of like core banking economics or brokerage economics or exchange economics, and being forced into this storefront that doesn't have a ton of power, that's squeezed between the big attention companies and the large financial institutions. And so the missing piece for me in that journey is DeFi. And DeFi comes at it from a very different place. It's much less concerned about how to get you to click the thing, or what feature is going to make you happy, or how to get you addicted to the dopamine rush of trading meme stocks. But it is much more concerned with how to manufacture financial products. It is in large part it's an engineering, and all the same words. It's an engine, it's a factory, it's the engineering of financial products. It just so happens that instead of the financial engineering being done in large banks by people who are trained over decades in order to get there, it is done by teenagers and open source developers, or people who are much more sort of in the what's the word I'm looking for? Anarchist camp. The hacker anarchist
Libertarian,
camp.
maybe.
Libertarian. The creative class. We'll put it that way. The Woodstock class. Anyway, so the manufacturing of financial products has gotten crowbarred out of the banks. It does not have to be made there anymore. And in fact, the entire technology stack, everything that is built over the last 30, 40 years in the banking stack, whether it's the core banking systems or the portfolio management systems or the underwriting systems, is largely irrelevant and uninteresting to decentralized finance because it requires none of it. It runs on none of it. If anything, all of that is a burden for the new factory, right? So if you think about the traditional financial services manufacturing plant as being coal-powered, this thing is solar-powered. And it runs on smart contract platforms, it runs on these decentralized chains, and it has very different mathematics and economics around how the factory of financial products works. But all that to say, you can make payments, you can make banking, you can make investments, you can make insurance, you can make asset management, you can essentially, you can make lending. So all of the traditional asset classes and functions, the financial functions of our economy, you can build on a different architecture. And so now we're in a very interesting place because we have the million user persona footprint of the fintechs who are not doing so well. And then you have the manufacturing engines of the DeFi ecosystem that's gone and been built over the last couple of years. And the two are now starting to come together, right? So you see Betterment, you see Step, you see BNY Mellon, you see every single fintech now, Robinhood, Revolut, you see all of them coming and starting to avail themselves to the manufacturing in the DeFi sector. And that's where we are today. There's still some fundamental faults with that story, but let me pause there and see where we go.
Let's pull up the poll results, please, Bryn. Thank you for that. And while we digest those, I want to just, if you listen carefully to what Lex said, and then you reflect back on what Lawrence said before about the regulators having, they're being in the Stone Age, and they've got these blunt regulatory tools. And then you think back to what Mauricio said about how hard this is going to be. We've got some heavy lifting ahead of us, no doubt. So let's take a look at the results. First question, what's your experience with DAOs? I'm familiar with the concept, 42%. Surprising that so many are actually members or regular contributors. So the last 3 questions there add up to a pretty significant number of you. So in the crypto world, we refer to that as red pilling, referring back to the matrix, where there's the blue pill and the red pill, and when you take the red pill, you enter the matrix. So a good portion of you have red pilled. Question 2, what is your experience with the metaverse? A lot more familiarity there, and then close to 20% have actually purchased a Web3 product, which I would...
I'm so sorry for your loss.
Thank you. I was one of the contributors to Constitution DAO.
Yeah.
So almost 20% contributed to building Web3 products. Awesome. This is what we tried to do when Peter and I set out to build this event, is to gather these camps together. And wonderful that a large portion of you are just familiar with it. And then experience with DeFi, again, sort of like stacking the numbers. A portfolio of crypto tokens, you can say it again. Sorry for your loss.
Yeah.
And then almost 20% claiming to be a full-on DJ.
It doesn't say I've sold my portfolio of tokens. It just says I have.
Yeah.
So
you haven't realized the loss
yes.
yet.
You haven't realized you're sorry. Yeah.
Right.
That one takes a little bit to hit.
I keep aping in. So let's then turn. The topic is really about DAOs. I think we have a quick intro on what is a DAO, but why does it matter? How do they work? And are they really contributing to the metaverse yet? I'd love for you to take that question and move into what did you recently do specifically with DAOs and specifically with Bankless DAO?
Sure. I'm going to take a route there. So
Please do.
You might have to remind me. So I want to address kind of the place where I left off, which is this lens of financial services going through the 2 transformation cycles. And the reality of it, everybody is down, and it doesn't feel great. And some of the story and the projection about what's going on when it hits the public markets becomes quite difficult once you start interacting with financial services equity research analysts, who are like the accountants for the accountants. It starts to get more difficult to tell this story and to really believe it. And I think a lot of what I try to do is to figure out fundamentally what is there. Like if we come to the space and we take it on its own terms and we believe the words that the space uses, what is the real thing that's going on? And so I've had to evolve my thinking to figure out the market environment as well. And so here's where it is, and I think it also for me explains why the DAO movement is so important, and not important as in like, okay, let's try something else that we can say on Twitter in order to make things valuable, but important in understanding the economic machine that would create value. And so it starts here. Financial services on its own is not an industry that can exist without context. Like, if I were to make a strong rhetorical point, it has no value of its own, right? Like, you don't you don't have a ship travel for months and months across the ocean, land, start building a village, and then set up a bank. It's not going to work. Everyone's going to die and starve. What you do is you start the economy. You start farming, you start building, you start creating, you start having commerce, you start growing the population, and there's labor and economic output and surplus and value and so on. And it's only once you establish an economy and your town or your community has something that they're doing in order to survive that is actually productive, then the first derivative is, okay, well, there's money in motion from commerce, you're paying, what's the infrastructure for transferring that? You need a money because you have an economy, not because a money is a thing. It's an abstraction to make our interaction easier. And then once you have money in motion, you start having money at rest, right? So people are creating surplus, then you start needing to have deposits in banking. And then once you have deposits in banking, you get to lending and putting capital at risk and investing and equities and shares and funds, and kind of you start getting into the broader abstractions. But finance on its own, if you take that GDP out, there's nothing there. It does nothing, right? It's just financial engineering that's self-referential. And so a lot of what's happened recently is self-referential financial engineering that tried to integrate with the real economy and was, largely blocked or denied or didn't have the right connectivity, didn't have the right regulatory connectivity, didn't have the right cultural connectivity to, to function and tokenize or digitize or security tokens, whatever you want, to really plug into the traditional economy. So to me, the next phase and the piece that's missing for this transformation of fintech to DeFi is that DeFi isn't on its own a repackaging of the traditional financial sector for the traditional economy, right? When you get into an Uber, you're not trying to pay the Uber with cash. You're paying the Uber within the ecosystem that it lives in, which is Web2, mobile apps, right? So your payment rail inside of Uber is the same as the value or the functionality that the Uber delivers. If you get into a cab, you pay with cash. Different places where these economies function. And so for me, the next step is for Web3, which is kind of the umbrella term for things that people are doing on smart contract protocols or protocols that run software and can move around value, is Web3 needs to develop a GDP of its own and an economy that's productive and functional. So if we all believe that we're going to some digital venue where we're going to live our lives, which functionally we're doing, and that digital venue will hold our assets, right? So 20%, 30% of people here use MetaMask. So you know what it means to have a digital inventory of your stuff. If we believe that's real, then the corollary is that you go there because you're making something. So the labor that you're putting into creating a digital painting, let's say it takes you 3 months, and the labor that you're putting into making a physical painting it's functionally equivalent, right? So, and that goes across all the different types of things you can build. So in my view, what you start to get is productivity, and you start to get organization of people, and you start to get kind of these atomic units of economic cooperation. So the way that we have businesses in the real world, the way that we have businesses or corporations or nonprofits, the same thing is happening in our digital venue. And that's what DAOs are broadly replacing. Or not even replacing, because there's nothing there. Like, again, you don't pay for an Uber with cash. In the same way, it doesn't really make sense to create a paper LLC and then shove it into Discord. It's just nonsense. And so DAOs are this fundamental building block out of which you're getting cooperation, economic activity, GDP, and then DeFi becomes the banking sector for the productive things that people do in this digital venue. So I kind of wanted to finish out that thought because I think it's fundamental to taking DAOs seriously, not just thinking they're an internet forum with a treasury, right? But they are organizing what people are doing and how they behave.
So then, if that's the case, and you do take DAOs seriously, and you're the chief economist at ConsenSys, which is one of the most powerful organizations in Web3, what then, whose idea was it to go build the relationship with Bankless DAO, and why did you do it, and how did that turn out when you came to the DAO and said, we'd like to provide contributors for free to the DAO in mass?
Yep. So my team is at the edge of these things, so we get to do lots of fun stuff. And one of the functions that we're doing is figuring out how to do DAO and Web3 engagement as a big, regularly organized company with software products that lots of people use. So it gets really complicated, right? I mean, there are other projects, and there are some smaller companies that have said, okay, we're going to blow up our company, we're going to completely decentralize, we're going to launch a token, and the community runs the thing, right? So like Shapeshift, for example, did that. You look at Maker, you look at the path that Uniswap is on, and a bunch of other projects. And that's a difficult path, and you need to be of a certain shape to do it completely. I think for ConsenSys, we're really interested in progressive decentralization, and we're very interested because our starting point is the Web3 approach is right, and that's where we want to be, and that's what matters, and that's what we're encouraging.
Can I put just to translate that, for those that are not totally familiar with that language, progressive decentralization would be saying, we are a benevolent dictatorship, and we want to move toward a republic or a democracy, depending on your definition of what decentralized is. So that's what Lex is saying, is ConsenSys has an interest in moving from this one form of government to another one in a peaceful fashion. Okay, go.
Yeah, and benevolent dictatorship is great. You know, like you can have a malevolent dictatorship.
It's a very efficient form of government.
You can have a malevolent dictatorship, and if any of you have ever worked in financial services, you know, like I worked at Lehman Brothers on we were doing strategy, and it was all about 5-year plans. You know, the McKinsey approach to helping manage an investment bank is a PowerPoint with 5-year plans and financial models, and then top-down military execution, right? So I don't know if Lehman was a benevolent or a malevolent dictatorship, but certainly every large financial institution is run in this manner, right? The Web3 approach is very different and multiple generations of thought away from it, where you are not only are you flat in the way that Google and Amazon are more flat than a bank, right? Where you run a software company by enabling product leads and product managers to independently operate. It's not as hierarchical. But in Web3, you're going further, which is you're actually passing the management and ownership of your product to your customers. And your customers and your community end up being the stakeholders that shape various aspects of how the thing works, and the thing broadly defined. So, for ConsenSys, and especially in my role, I'm really interested in what is a world where 30% of economic activity looks like that, right? So if Amazon's got 80% share of e-commerce, and e-commerce got 15 to 20% of all commerce in the US, retail commerce in the US, and something like 60, 70% of all commerce is e-commerce in China, right? It would have been absurd 10, 15 years ago to say this many trillions in volume are going to be done entirely through a web browser or through a phone. And similarly, it's absurd for me to say 30% of world GDP is going to come from strangers on the internet assembling into DAOs using their crypto wallet. But
maybe.
I'm pretty sure it's going to be that way. And so what are the things that we can take as ConsenSys to approach that and play with that without, again, blowing up some of the very key infrastructure in the space? And things like governing DAOs, participating as a full-time owner and governor and contributor is one of those things. But another is just steeping our culture and our people in the DNA of what's going on in the space. And to me, it's the fringe and the novelty and the curiosity that matters. So how can we create a sort of a safe way for people to learn how to contribute in this very different organizational approach? Because it can feel like the Wild West, and it can feel naked, and you can feel like you're in a weird place with people fighting for attention. And so we wanted to create a motion where a traditional company was able to partner with a DAO and help the DAO build useful things. And we think Bankless is a fantastic DAO because it's cultural, it's financial, and it propagates the values that we agree with. And then on the other end, I think for the DAO to receive the contribution is pretty powerful, especially if the people you're sending there are talented or not trying to blow you up. And so it was a very interesting experience. We had to collaborate with some of the core people in the community. And then we also had to put up a proposal to the community, which went to a vote. So it could have been a no. And there was debate about whether the labor was good or not. And the vote passed. And now we're setting up that program where we're going to have weekly days from our company, people will come to the DAO, build things that are useful, and kind of bring that DNA back to the firm.
And by come to the DAO, you obviously don't mean physically travel anywhere. You're just moving your attention from the daily work to the Discord and whatever projects you have going on.
Yes, we don't have like a disintegrating teleporter that lawnmower mans you into a Twitch stream or something like that.
And watching the debate in the forum was fascinating. There were weeks of back and forth between the DAO and ConsenSys members challenging a lot of the fundamental assumptions about like, why are you doing this and what is in it for us? So any other comments on that?
Yeah, for sure. We don't have the time to fully open it up, but so I missed a concept in there, which is, in my view, like what ConsenSys gets is cultural, and then it also gets to act in the way that it believes, which is to be a pillar of this community and kind of stand it up and grow it. And in my view, it was contributing labor is unequivocally good. From the DAO perspective, it was actually, we already have this structure in place, and our members might want those projects that your labor would maybe take away from them, which was very strange for me to see. But what I realized I missed is that in a traditional company, you have a recruiting function, right? So let's say there's a company, it's Coinbase, or it's Robinhood, it's Goldman Sachs, right? So Goldman Sachs is, let's say, I can't make up a Salomon Brothers. Great. Salomon Brothers has a digital asset division, and they're hiring for the chief product officer of the Salomon Brothers digital asset division. You're going to have way more applicants than there's space for labor. And so there's a recruiting function that filters who can come in. And that's what we missed. We assumed that all that labor is going to be productive and good, whereas for the DAO, there's a filtering function for who gets to contribute. And I think that's a great learning for us, because I think that's missing across, that's probably missing across the DAO ecosystem. Like this idea of like, how do you tighten who gets to contribute and what's useful?
I want to comment on that quickly and then draw your attention to the top question here, which was asked and then upvoted. And maybe we can just lightning round that one because we're just about out of time. But hopefully what you've gained here is an appreciation for a native web, a company that is crypto native, ConsenSys, that is run like a Web2 firm. It is centralized, it is top down, that is trying to embrace the Web3 ethic through a DAO, and how difficult that is. And you are seeing on stage, and you can view online the steps that they're taking and how sort of clumsy that is. We've got a long way to go. This is the very beginning of a long and super interesting story. So you're in a moment of time where, yeah, there's war going on, yeah, the markets are melting down, but there's also some really cool stuff happening in this blending of worlds.
Yeah, I don't think anyone else is doing what we're doing. It's weird, but I think it's really curious and powerful.
And super valuable for ConsenSys and for Bankless DAO. Did you want to nail this one quickly? The question is, how do we bridge the dichotomy of the control/regulation-based TradFi, or traditional finance, and the boundaryless DeFi, or decentralized finance? I think that's, in a sense, that we're watching that unfold.
Yeah, I think what's the tail and what's the dog? And a lot of the conversation is about the tail, and it's wrong. It's a distraction. I think the tail will get wagged. Yes, you have GDPR. Do you have GDPR before in 1998? No, that's psychotic and totally useless, right? So it's the same thing. I think figuring out what is the large lever is really important for me, and I think the answer is get either that Web3 economy like bootstraps and is there and is real and DeFi banks it, or none of it matters. So I think the regulatory wrappers and the clipping at the edges and putting things into the right box, it is inevitable, it is correct, consumer protection is great. There is no chance that that is the thing that makes the important stuff work. It's the consequence. If the important stuff works, then it will get regulated and it will become part of people's lives. I don't think you can start the other way around. People can have different opinions, but that's definitely where I land.
Beautiful. All right, please join me in thanking Lex for sharing his time with us. That was excellent.
Thank you.